You are watching Daily Market Pulse. Markets closed Friday, May 15, 2026. Here is where everything ended the week. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Markets closed the week mixed. What Friday's moves mean for Monday. Today's agenda: stocks and bonds. Gold shines as inflation hedge. Silver's volatility amidst gains. Oil prices decline from highs. Crypto market pulls back over weekend. US dollar strength continues. Let's start with how the stock market wrapped up the week. The stock market closed out the week with a mixed performance. The S&P 500 managed a slight uptick, finishing around 7,444. The Nasdaq is trading at 26,225.1, lower on the day, down about 2%. But this happened even as the U.S. 10-year Treasury yield climbed higher, hitting 4.6%. That's the highest it's been since February of last year. This tells us investors are increasingly expecting interest rates to stay put or even go up for a while longer. When those yields climb, it makes borrowing more expensive for everyone. For companies, especially those tech giants that promise big profits way down the road, their future earnings become worth less today. It also makes safer investments like bonds look a lot more appealing than stocks. So, while some indexes ended the week in the green, the underlying pressure from those rising yields was definitely there. This suggests that the rally might be getting narrower, with fewer companies leading the charge. As we head into the weekend, keep an eye on any comments from Federal Reserve officials. They could give us clues about what's next for interest rates. We'll also be watching that 10-year Treasury yield closely next week to see if it continues its upward trend. Meanwhile, a traditional safe haven asset found its footing. Gold prices continued their upward march on Friday, closing the week around about $2,385 an ounce. That's a solid 0.8% gain for the day. This strength is really being fueled by those persistent worries about inflation and the ongoing geopolitical tensions, especially those involving Iran. The amount of gold held in registered inventories is still strong, which tells us there's plenty of demand out there. Gold is often seen as a safe bet when prices are going up fast or when the world feels a bit shaky. Investors see it as a way to protect their money. So its rise on Friday really shows that people are still concerned about the economy and are looking for a place to park their cash safely. Gold is trading at about $4,560, lower on the day, down about 2%. Keep an eye on oil prices this week. Gold is trading at about $4,560, lower on the day, down about 2%. We'll also be watching global events closely, as any further escalation could make gold even more attractive. And speaking of precious metals, silver experienced a more dramatic move. Silver, on the other hand, experienced a much more dramatic move on Friday. It dropped by a significant 13.1%, closing the day at about $76 an ounce. Silver is trading at about $78, lower on the day, down about 9%. This kind of sharp drop often means investors are taking profits or perhaps reacting to some broader changes in how they feel about the economy. Silver is interesting because it's used both as a precious metal, like gold, but also in a lot of industries. This can make its price move around more than gold's. So this big drop could signal that people are worried about industrial demand or maybe just pulling back from riskier investments in general. Even with this sharp fall, some analysts, like those at JP, silver is trading at about $78, lower on the day, down about 9%. So the big question for next week is whether this drop was just a temporary blip, a chance for people to buy in at a lower price, or if it's the start of a bigger downward trend. Silver is trading at about $78, lower on the day, down about 9%. Shifting to the energy markets, oil saw a notable pullback. Now let's turn our attention to the energy markets. Oil futures pulled back on Friday. WTI crude finished the day down about 1%, settling around about $100 a barrel. Brent crude was trading at about $106. This happened even though there are still worries about global oil supplies and the ongoing geopolitical tensions that have been pushing prices up. The market reaction on Friday seems to suggest that some traders were taking profits after the recent run-up. But the fact that there's still a geopolitical risk premium baked into the price means that traders are still worried about potential disruptions to supply, and that could easily send prices soaring again. So going forward, we'll be watching very closely for any news out of the Middle East and other major oil-producing regions. Any development that could affect supply or demand will be key. WTI crude is trading at about $101, slightly lower on the day. And in the world of digital assets, cryptocurrencies saw a notable downturn. Now let's talk about the world of digital assets. The cryptocurrency market saw a noticeable downturn on Friday. Bitcoin, the largest digital currency, fell by 2.2%, trading around about $78,985. The total value of all cryptocurrencies dropped to about $3 trillion. And the sentiment index, known as the Fear and Greed Index, has now moved into fear territory, sitting at 31 out of 100. This means investors are feeling more cautious. Cryptocurrencies are often seen as risk assets, meaning they tend to move in the same direction as other speculative investments like tech stocks. So when inflation fears start to rise and it looks like interest rates might stay high, investors tend to pull their money out of these riskier assets. That's exactly what we saw on Friday. The hot inflation data made investors nervous, and they moved away from Bitcoin. This also brings back concerns about retail traders who might be using borrowed money to invest. If prices keep falling, it could lead to sudden, sharp drops called flash crashes, and a lot of people could lose their investments. So for the week ahead, we'll be watching to see if Bitcoin can find some stability. Key support levels to watch are around about $75,000. We'll also be keeping an eye on what's happening with Bitcoin held on exchanges and what the big players, the whales, are doing. That retail-driven volatility is still a big factor to watch. And underpinning these moves, the US dollar showed continued strength. And underpinning many of these market movements, the US dollar showed continued strength. The US dollar index, or the dollar index, gained another 0.5% on Friday, closing at 99.3. That's a monthly gain of over 1%. This strength is really being driven by those higher US Treasury yields we've been talking about. When US interest rates go up, it makes dollar-denominated assets more attractive to investors looking for better returns. A stronger dollar can make American products more expensive for people in other countries to buy, which can impact US exports. It also makes imported goods cheaper for us here in the US. So the dollar's strength is something we'll be watching closely. We'll be looking for any signs that this trend might be changing. And we'll also be paying attention to economic data from around the world. Geopolitical events can also play a big role in currency markets, so that's another area to keep an eye on. Finally, let's zoom out to the bigger economic picture. Finally, let's zoom out and look at the bigger economic picture. One of the most critical themes we're seeing is that consumers are running out of savings. Yes, tax refunds might have given some people a little breathing room for a short time, but the reality is that real retail sales, meaning sales adjusted for inflation, are actually going down, and more people are falling behind on their loan payments. This tells us that households are really starting to feel the pinch. Consumers are the backbone of the US economy, making up a huge chunk of everything we produce. So when people have less money to spend, or they have to cut back because their savings are gone and costs are going up, it can really slow down the entire economy. This can hurt businesses, lead to job losses, and make investors nervous. The market has been reacting to this, and while some parts of the economy are still doing okay, there's a growing worry that consumers could lead us into a recession. That's why everyone is watching things like retail sales and how many people are defaulting on loans. For the week ahead, we need to keep a close eye on how consumers are spending. If retail sales keep falling, or if more people can't pay their bills, that would be a big warning sign for the economy. We'll also be watching how businesses react to potentially weaker demand, because that can affect their profits and, of course, their stock prices. Now let us turn to today's live market snapshot, where gold, crypto, stocks. Now for our daily financial market update. Here is where the key asset classes stand as of Saturday, May 16, 2026. Gold is trading at about $4,560, lower on the day, and is sharply lower over the past 5 sessions. Silver is at about $78, sharply lower today, and sharply lower over the past 5 sessions. In crypto, Bitcoin is at about $78,300, lower on the session and lower over the past 5 sessions. Ethereum is at about $2,200, lower today. Other major crypto, Solana at about $87, lower. BNB at about $656, lower. XRP at about $1.419, lower. On equities, the S&P 500 at 7,408.5, lower. The Nasdaq at 26,225.1, lower. The Dow at 49,526.2, lower. Internationally, the DAX at 23,950.6, lower. The Nikkei at 61,409.3, lower. The FTSE at 10,195.4, lower. On the bond side, the 10-year U.S. Treasury yield is at 4.6%, strongly higher on the session, and the 30-year yield is at 5.1% higher. Elevated yields continue to place pressure on risk assets and growth valuations. Rounding out the macro picture, WTI crude at about $101 per barrel, slightly lower. the dollar index at 99.27, slightly higher. Euro-dollar at 1.163, slightly lower. The picture is mixed across asset classes, with no dominant directional theme yet. Investors are watching macro catalysts closely before committing to a clear risk stance. As exchanges closed for the weekend, investors grappled with persistent inflation fears and the impact of higher interest rates. Gold ended the week on a high note, while Bitcoin and other cryptocurrencies saw declines. The consumer's diminishing savings and the fragile economic outlook continue to be central themes. Thank you for your attention, and we will see you again tomorrow.